Coming up, the consumer slowdown, retail sales failing to keep up with population growth, the implication for the share market and interest rates. All next. It is your daily 10-minute business and finance news wrap for this 28th of May 2024. The Australian share market did fall today by 0.3%. We'll have the details with Robert Talevski from Activam. But first, retailers will be doing what they can to attract shoppers this end of financial year sales season because consumers are really slowing down. The Bureau of Statistics says retail sales rose only 0.1% in April to be up 1.3% on the year, and that is less than inflation and population growth. For more, I spoke with IFM Investors Chief Economist Alex Joyner. Alex, how would you describe the retail space right now?
The retail space in Australia is extremely difficult. We saw another very, very soft print for April retail sales, up just 0.1, coming after a minus 0.4 result in March. And what it says to me is that the retail sector is under pressure because households are under pressure, really feeling cost of living pressures and higher mortgage rates.
Can you put that into context? If we're seeing the population grow, we're seeing inflation, yet sales aren't really moving. What does that mean?
Yeah, what it means is volumes are declining. So we would expect that retail sales in a nominal sense, which is what these monthly data would be supported by more people being here, greater population growth, and cost of living. So the inflationary impact on the price of goods. And still seeing some really, really soft numbers. 1.3% annual retail sales growth is exceptionally weak, considering these tailwinds. We don't really see retail sales be this weak outside of material recessions.
Tell us more about how the consumer is feeling. What do these numbers say about the way consumers are spending? Because I note that even food retailing is down. What does that show?
Well, it's interesting. I guess in terms of the broader consumer, what we're seeing is a swing away from discretionary spending, which is what a lot of retail sales is, to non-discretionary spending, which is really your bills and your mortgage. That's the overwhelming priority for the consumer where, people's bills are rising, mortgage costs are high, and that's where the consumer dollar is going. Retail sales is sort of the, what's left, the remainder in that budget equation. Now, food sales rarely go down. There was a little bit of volatility in the data because of the timing of Easter, which dragged some of the food sales into March. So it was a little bit weaker April. And interesting insights from the ABS, we also saw weaker alcohol sales. And that was something that the ABS attributed to us buying lower priced alcohol than we otherwise would have been. And that's maybe another interesting reflection of just consumer behaviour because of cost of living.
Okay, so how do you think retailers are going to deal with this or are dealing with this? I mean, we are approaching the end of financial year sales. It's, this time of year. Will we see bigger than usual sales, for example, as retailers try to attract customers and clear out stock if there is a build-up of inventory?
Yeah, the last 12 months have been basically flat for retailers, or in some sectors like household goods, a decline in sales. So, we've got a situation where, the consumer has really pulled back and need to be enticed into the stores. And, I would be expecting material sales as we approach the end of financial year in June, just because, retailers are really just trying to get consumers back. And it's a competitive marketplace out there. So, material discounting will be coming through. And what we also might see as we enter the next fiscal year is some of the tax relief that people might get, that might seep into retail sales as well. So there is a little bit of a silver lining as we enter the back half of the year.
Okay, so if consumers spend, what's the RBA likely to do? I know that's a longer answer because ultimately if the RBA looks at the headline and it's weak, I mean, what's it thinking about what it's going to do with interest rates?
Look, I think for me, this really underscores households being under pressure And the RBA, to my mind, will be looking at this and going, do we need to impact the household sector more than we already currently are? And I think the answer to that question is no, because the household sector is just barely hanging on, to my mind. People having a job really allows them to weather that cost of living impact that is being passed on to them through inflation. If the RBA continues to raise interest rates, we might see that labour market dislocation come through a little bit more and people become even more uncertain. And that would have a larger impact on the economy. I think for now, the RBA is just content to wait and see and content to see if households can just keep on eking out some growth in their spending to support the economy, but they don't want to see a collapse.
That is Alex Joyner there, the Chief Economist at IFM Investors.
Now, Market Day on the SBS On The Money podcast.
The Australian share market fell today. The S&P ASX 200 down 0.3% to 7,766. For the details, I spoke with Robert Talevski, the Managing Director at Activam Group.
Yeah, so rising oil, copper, silver, gold prices, a bit of an Olympic theme there, Ricardo, pushed the energy and materials sector higher. The gains were more than offset by sectors that sort of fell, like your banks, your retail and your healthcare sectors. Look, month to date, we're looking like a positive month for Aussie shares. We expect it to finish up around 2%. The financial year-to-date return is looking like more like a 9% return. The Aussie dollar gained 0.5%, up to 66.7 US cents, supported by higher commodity prices. The US and UK markets were closed for public holidays.
How has the weaker than expected retail sales numbers impacted the market, especially retail sales and those interest rate expectations from the market?
Yes, so we did receive some guidance on how the Australian economy is performing. The Australian retail trade figures released this morning missed on consensus after rebounding on a negative month previously. Look, clearly there are pressures being faced by the consumer. Households are starting to limit spending in response to these cost of living pressures. The RBA is looking for evidence of a slowdown in the economy to help, bring inflation back to its target. The weaker than expected retail trade number will help for a case to cut rates from an RBA perspective. And look, the share market was drifting lower today. Obviously, didn't really like the news of that retail number.
I know it's relatively quiet today, but any other company news catching your eye?
Yeah, there's a couple there. Tabcorp was up. Obviously, one of the best performers was up around 3%. Medical software stock Pro Medicus announced a 5-year deal worth about $45 million. The stock added around 2.7%. The uranium sector, was one of the worst performers. Boss Energy was down 9% after its CEO sold more than $20 million worth of shares. That's obviously not a good thing from an investor standpoint when you've got a senior figure selling shares within a company. Newmont Gold, Evolution, which is also a gold-related stock, and South 32, all added 1.9 and 1% respectively off the back of the commodities rally.
And where do you see the opportunities for investors at the moment?
Look, we think broadly speaking, equity markets should continue to do well. Investors, we expect to benefit from being invested in the markets. Look, overseas shares should benefit from a higher exposure to the AI and tech themes, also supported by a solid high single-digit earnings growth number and a reasonable economic backdrop. And also the small cap sectors as well, we expect a bit more upside there, a bit more of a catch-up rally relative to the larger cap sectors, and it should also benefit from the eventual rate cut.
That's Robert Talevski there from Activam Group.
This SBS On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It is not personal advice and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any